It is April 30th, and this is, of course, the video luggage takes 30,000 to a million. After I review the account, I'm going to talk about it a little bit and share with you some grim performance, followed by some ideas about a research topic or a company that you might want to look into, that I want to look into, as well as my overall thoughts on the future. So, without any further ado, here we go. I'm sitting at $158,412.12. My positions are on the right, listed here. I'm going to scroll through them. By the way, I'm down like almost $7,000 today. 6,670. And it's mainly because of EBIX and the correction that Apple has been undergoing. My option positions on the right, still very heavy on this company, although I should have unloaded some of my position, especially on the option side, seeing as how the earnings report did not impact the company price positively. So now I'm kind of suffering through that. However, I do have a substantial amount of shares, and there is another earnings call coming up soon. I don't have huge expectations for that one either, because I think most of what is swaying EBIX's price right now is the fact that India is undergoing a very heavy spike in the cases of infections. Therefore, EBIX is very heavily hit. Most of their revenue is based on travel, remittances, and exchange over there abroad in India, so the revenue is going to be hit substantially, as well as the profits, I'm guessing. That is my guess. However, I'm expecting a very strong first quarter earnings report, and then very bleak guidance for the rest of the year. So I will write it out. I'm going to try to stick it out till early next year. I hope I have the strength to do it when there is the planned IPO happening. So hopefully that will boost the price a bit and see what's going on. I might sell a little bit beforehand. I may sell right after. I just don't know the details of how things are going to play out yet. In any case, these are my options positions here on the right. You will see. Let me see if you're seeing that. Okay, yes you are. So my options position on the right, I'm going to scroll through it fairly quickly. You can find out the ticker, the number, the strike price, whether it's a call or a buy, the expiration date of the option, and how many contracts I have over here. You can say if it's a buy or a sell. And I meant a call or a put, not call or buy. So you can see here I have quite a bit of EBIX options. I have some Apple calls that have not done well today. Apple corrected. I have a Viacom call option. So this is the actual account here. You can see the ticker as well as the number of shares I have, and the number on the right represents the daily value, daily change in value. You can see how EBIX and Apple contributed to most of my losses today. Almost all of them. The rest of the account is pretty snoozy. Everything just kind of chugging along. Alibaba was down a little bit. I picked up a couple more shares. That's one of the biggest bets that I'm trying to make, is actually Alibaba. Besides EBIX and Apple, I think Alibaba is my fourth largest bet at the moment, after Realty Income, I believe. And the reason why I'm making that is just because of undervaluation. I think that the company is making a lot of money for what it's priced at right now, and I do realize that they're undergoing some massive changes in China when it comes to their capital structures and when it comes to their anti-popularity campaign, right? They're trying to, or pro-power campaign. They don't want to give too much power away to the corporations, even though, as far as I know, every big corporation in China has its own government wing in it. It's not a very familiar system to what we, and I say we, I'm assuming you live in the US, but if you don't, me and the people in the United States enjoy, and I guess most Western countries, where there's quite a bit of freedom as to what you do with your own corporation, but it's not the same over there in the East. So there's a lot of risk there that's involved, and I'm guessing some of that risk is getting priced in right now. So other than, well, let's show you the EBIX chart here, what's going on. Other than Alibaba, I have actually a ton of money tied up into EBIX here, over $40,000, and not including the options. The options, I have quite a bit of collateral here, almost $30,000 of collateral, which I'm guessing that's going to expire, with the exception of one. The liability is going to expire with the options, with the exception of the $40 put. I believe I'm not gonna see a $40 handle on the EBIX stock, perhaps come June, but I don't know the future. I'm just gonna ride it out. I just figured that the floor is just somewhere around here. I have a hard time believing that it's gonna go back down to the $12-13 level that the company was at, in the March of 2020. I just don't see that happening. But I can see maybe a $20 level happening, if especially since there's a lot of short sellers pushing the stock down, and they have a lot of firepower usually, and we'll see what happens with the company. So in other news, okay, I did have one actually extra idea that I want to share with you, and I was just basically looking for really high quality companies that have been consistent performance, they make money, they have some prospect for growth and improvement, and they pay out some of their money back to their investors. So I did find one company it just looks very solid on the surface, but I haven't really given it that deep of a thought yet. I haven't done enough due diligence and research, and so I haven't bought any yet. However, if you know of this company, you own it, or have done some research on it, please let me know, because I'm interested to hear more about it. I want to make sure I make a safe bet here, because my risky bets are not paying off as of late. The name of the company is this here. It's Premier Incorporated, and it's a healthcare information service company. They do a bunch of stuff. I read through their business briefly, and they do a ton. I mean, everything from infrastructure to like efficiency research and all kinds of services for healthcare providers and others. However, what really impressed me the most by this company is the strength of their numbers. The price has been sitting about the same level for the last 5 years or so. However, if you look at their numbers, you'll find out that, first of all, the price to earnings ratio is 8, which is very good. Forward price to earning is still good at 14. And then they have almost zero debt, relatively speaking, to the rest of the market, which I thought was very nice, since I tend to invest on margin, and if the company is margined out as well, then that creates a bit of a problem, right? That creates so much leverage that it's just a little bit of wind blown can cause major problems. Other interesting numbers is the earnings per share this year has increased by 27%, and the earnings per share for the next 5 years and next year, it shows for a moderate increase. However, earnings for the past 5 years is a higher number. So we'll see how that goes. The sales in the past 5 years has not increased that much, but the company does make money, and a lot of money, and it also has increasing revenues. So I have no reason to believe that this will stop happening. So I believe that it will continue to happen. Other good numbers are the most impressive. Let me see if you can see this clearly. Yes, you can. The most impressive thing about this company to me is the numbers that I care about the most, which is return on asset is over 15%. And the other number I care most about is the profit margin, sitting at almost 35%. Now, in some other websites and data mining, tools, it doesn't say it necessarily that it's 35%, but it's still above 20, which is extremely impressive to me and to probably most investors. And the craziest number out of all of them for this company is actually the payout ratio. I mean, their dividend is 2%, over 2%. And they're only using 3% of their profits to pay this out, which is very, very impressive to me. So I think this company is as safe as it gets, just looking at the numbers. However, if you have something on this company and know anything about it, and figure out a reason why I shouldn't use it as an alternative to bond, let me know, because I'd be really interested in finding out what that reason is. As right now, I'm thinking even just buying some and then doing some further research on the company. So again, the company's Premier, and the ticker is PINC with a C, PINC. So, with that said, I've given you a brief overview of the account, shared with you my misery when it comes to my EBIX play as of today. I was even come yesterday, but this 8% drop almost just completely wiped me out today, especially when it gets piggybacked on Apple's decline after amazing earnings, which I knew they were coming. But apparently the forward guidance really got to investors. I think they're afraid of chip shortage, as well as new virus-related activities around the globe. And also, one real concern that I'm also concerned about is the seeming end of free money for people, for unemployeds, for stimulus payments to the population to help with the rents, etc. So all that stuff, even for corporations and banks, it seems to be coming to an end. And apparently some Federal Reserve connected members, or at least ex-bankers, are finally thinking about raising rates at some point in the future. Federal Reserve, of course, has said that they'll do it in 2023 or something like that. But things change quickly in markets, and I'm sure, being a market-dependent institution, the Federal Reserve will adjust their stance. So, those are my thoughts on the market. Those are my thoughts on the companies that I'm planning to invest in. It's really easy to do better than me right now, today especially, so hopefully you're all doing better. And I think I'm going to end it right there. I'll see you all probably next week. Peace out.